What's up, people? It's Nadia and Nicole.
Bringing you another installment of the Wealth Twins Show.
Yep, we're bringing you the best tips, tricks, and inside scoop on building your wealth on the road to financial independence.
And what does that mean, Nadia?
That means make work optional.
That's our goal. We want you to make work optional, and we want you to be able to fire your boss.
So today we're going to speak about the best dividend stocks to buy for passive income and why you should care about royals. And no, we're not talking about Megxit, okay?
So first things first, I want to ask you, Nadia, what is a dividend?
What is a dividend, Nicole?
Okay, she flipped it on me. A dividend is a cash payment that a company makes to shareholders, right? That usually is a percentage of their profit that they pay out at a set time, either monthly or quarterly.
They don't pay it out daily?
It'll be nice, but no.
Okay. So why do we like dividends? Because we like schmoney.
Oh. She just said schmoney and she did a dance.
Yeah, I did schmoney dance. No?
Nadia, you're 40-something years old.
I'm not 40-something.
Okay, I'm 40-something years old. Now, the real reason why we like dividends is because it gives you passive income. And dividends, there's no way more than passive income than that. That's like one of the best ways to get passive income.
Yeah, you get passive income just for holding it, all right? So also, we like dividends because, a dividend stock, because it's like real estate for cash flow purposes, right? You are getting a cash flow, and to me, it's safer than almost having a real estate investment because your cash flow on a real estate investment is not guaranteed to you, right?
Okay.
Your tenants don't pay you rent one day. With these dividends, they're basically guaranteed when they come out.
So a company does not have to guarantee you a dividend, but a company that gives out dividends, when they establish that they're going to give out dividends, they should have that this is going to be a very long-running thing. Now, give an example. Say, and the reason why Nadia is going to say housing and cash flow purposes, say a stock is giving a 5% dividend, right? If that stock price does not go up, but that company continues to pay that 5% dividend, it will just take you 20 years to get your money back, okay? So you actually getting a payment every so often that at the end, you just for holding the stock could make your money back on that.
It's kind of like you're mitigating your risk when you're buying these dividends.
It's a safety play, but also it's something that the companies use to entice people to buy it because they're no longer growing. A lot of times people buy stocks because they want something that's going to buy low and sell high, but these stocks that provide a dividend, especially a good dividend, is not that type of stock. It's a more stable company that has to say, you know what, our business model has changed, but what we can't offer you because we have this recurring revenue, we can offer you a dividend.
Yeah, and a lot of times these dividends are taxed at a lower rate than your regular income, and you don't even have to take them out. You can reinvest them into your portfolio. I do this a lot. I don't need the cash coming to me, so I leave it in there to grow with my investments.
So when she says she reinvests it, she actually buys more stock in the company with the dividends rather than doing that. Now, you can do that because, one, if you reinvest a dividend, you don't get taxed on it. But when you do get taxed on dividends, it's taxed lower than actual income, okay?
All right, so now that we know what dividends are, then I bet you want to know which ones are the best dividend stocks to buy.
Which are the best to buy? Now, this is where things get interesting, okay? Now, there's actually a list. It's all about preferences, but there's a list, if you're talking about track records when it comes to these stocks, which stocks actually pay great dividends and for how long, okay? These stocks are called, based on S&P, the dividend aristocrats, okay? S&P has actually come out with a list that has 57 companies that have been paying dividends and increasing the dividend year over year since at least 25 years. Some of these companies have gone on to make these dividend payments and increase the dividends every year for over 40 years. Now, S&P calls these guys, these companies, the aristocrats, and they make a list of them. There's 57 of them, and they update that list every January.
All right. What does it take to become an S&P? You have to be paying out this dividend for at least 25 years.
So if within those 25 years, even if you hit 25 years and then on 26th year, or you did 24 years of dividends, and then on the 25th year you did not, you get kicked off this list, okay? So in order to stay on that list, you have to have a dividend raised up year over year for at least 25 years and keep going. Now, those are the companies. Now, if you want to buy these things, you can buy those individual companies based on the names that you find on the S&P aristocrat list, or you can go to a company like ProShares that actually offers these in a form of an ETF, and they call their Dividend Aristocrats ETF the royal family of dividend growers.
Yeah. Seriously, people, these are really the only royals you should be caring about, because these are the ones that are going to make you money. We know the whole Prince Harry and the Megxit thing is pretty interesting, but this is what you should be focusing on.
Good luck with you guys out there, but you know, these are the only two, or these pro share royals are really the only ones that put money in my pocket, so that's the only one I really care about. Now, there's two in particular that ProShares offers. They offer like a family full of them, but there's two that we really want to talk to you about. One is called Noble, and the other one is called Regal. Okay,
so we're going to give you the ticker right now for those. Noble, N as in Nadia, O as in Oscar, B as in boy, L as in Larry. And Regal, R as in Roger, E as in Eddie, G as in girl, L as in Larry.
Now, tickers are a way you find these in order to buy them in the stock market. Now, you buy these ETFs as you would an actual stock, just like in the stock market you would. The price goes up and down, or some of them stay the same during the day, and you can buy them as like you would in the stock market.
Yeah. So, Nicole, should you buy the aristocrats as an ETF or as individual stocks?
That is, there's pros and cons to both.
Okay.
Now, when it comes to making your life easier and also being diversified, you know how I feel. We like ETFs and we like index funds.
Yep.
Now, when it comes to these aristocrats, like I said, these companies have been paying out these dividends for a long time. So some of these companies, and most of them, are actually household names. Now, with that, some of them might be oil companies, some of them might be tobacco companies. Now, if they don't fit your taste, or you have something morally against it, then you want to be able to pick them individually.
Yep.
Now, the ETF will have a little bit of each one of these aristocrats, so you will get each one of these companies. That will make your life easier. But if there's one of these companies or more that you don't like, then you can save some headache or for yourself in terms of moral responsibility, just taste, by buying them individually.
Yeah.
And you have to monitor them more, but it'll be more customized for you.
Yeah, it might require a little more research on your end, but what I do personally, I don't like to invest in companies I don't align with morally, right? I'm not going to support your business. I don't buy your product, so why should I buy your stock? Okay?
So even if it makes your life easier, you don't have to. But if you don't have that moral problem or so, and you want to find stocks that are great in terms of dividend payout and passive income, then check out ETFs that provide them, such as ProShares. Now, again, ProShares is not a company, you know, we particularly support in terms of we don't get paid by ProShares or anything, but
not yet.
But with that, you know, we want you to be aware they have something simple, ETF, that will give you a little bit of each company are paying these great dividends. So that's what we want to make you aware of. If you like what we shared with you in this video, if you like what we talked about in terms of aristocrats or the royals, and even how you feel about Megxit, put it in the comments. Let us know what you think. We love comments. We respond to all our comments. We would love for you to share this with your friends and subscribe to our channel.
Yep. And if we look tired today, it's because we both have toddlers, and yeah, we're over 40.
But they don't do
not
the
that far over 40,
dance.
Okay? But they're not sleeping, so that means we don't sleep.
Yeah, I
so
don't
if you
sleep
can
at
relate
all.
to that, put that in the comments too.
Yeah, say, you know, tell us to keep strong, you know?
We're putting these videos out for you. Little sleep,
and
no sleep, whatever. It doesn't matter.
Yeah, if you have a way to, you know, help put babies to sleep, put that in the comments too. I'll be interested.
All right. We wanted to leave you guys with a quote our mother used to always say to us, and it is, your manners will take you further than your money.
Yes.
And we always found that to be true.
Yes, we think money is important, but manners are more important, guys.